Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there. Good evening. I'm Yatin Mota.
Well, good evening, so to say, Yatin, because it is raining cats and dogs here in Mumbai. And of course, it's raining gains on the Lal Street as well. We won't deny that because it's a 150-point up move on the Lal Street, on the Nifty rather. And we have reclaimed that 25,000 mark, building on the momentum that we saw in Friday's session. But for the week, Yatin, last week we did see negative returns. However, that has turned, and in fact, FIIs were also had also rather turned buyers in Friday's session. Whether or not that happens today or not, we'll be watching out for that. But it was a good session. Early monsoon arrival, RBI dividend, and even the Trump's delaying of EU tariffs. So that has played a pivotal role in the global rally that we have seen. Today, US futures were trading higher, although US markets are shut on account of Memorial Day tonight. So we won't have cues from US markets tomorrow, but otherwise, barring the UK market, which was shut, CAC, DAX, all of them were also doing well, and US futures were also in fine fettle. Talking particularly about our markets, 16 years, that's the earliest monsoon arrival in the last 16 years. In fact, monsoon has reached Maharashtra as well. And which is why I think we saw good traction in auto shares, in some of the FMCG names as well. IT and metals were other top performers. Broader end of the markets also did well. Mid-cap index was outperforming. The NSE advanced decline ratio was at 2:1. In terms of individual movers, then Bajaj Auto, some of the two-wheeler stocks were doing well. Even Hero MotoCorp was doing well. JSW Steel on the back of a reprieve coming in from Supreme Court in terms of BPSL resolution. That stock was up 2%. Second top gainer on the index. M&M was doing well. Of course, tractor business is rural facing, Yatin. The early monsoon arrival bodes well for M&M as well. Nestle, Hindalco, these are some of the other gainers. On the flip side, what didn't do well was Eternal on the back of, the reduction in weightage on both MSCI and FTSE. Yatin will be talking about that in just a bit. Kotak Bank, on the losers list. Ultratech Cement, Power Grid, these are some of the other laggards. But Yatin, quite a few reactions when it comes to the broad end of the markets.
Yes, and the markets, Nifty closing above the 25,000 mark did have a positive impact on mid-cap and small-cap indices, which were up anywhere between 0.5% to 0.25%. Advanced decline ratio is almost 2:1, so 2 advances for every 1 decline. BEML, after a strong set of numbers along with good management commentary, especially to do with the metro orders on the railway front, that stock gained 15%. G Vernova, transmission and distribution, that stock moved 10% higher to hit upper circuit. Gillette, Linde India, the other MNCs post numbers which saw almost 7-8% of gains coming in. What was not doing well is the likes of Power India, Balkrishna Tyres. Both of these stocks were down 6% each. But clearly, if you look at stocks like Solar Industries, market capitalization now becoming a realty close to 1.5 lakh crores. MRF, JK Cement, as well as Divi's Lab, these stocks are now at multi-year highs.
All right, quite a few reactions, but of course, on both ends, some were doing well and some were facing the brunt for weakish numbers. And one of those stocks was Glenmark. It returned to profitability in the quarter gone by, but still fell short of expectations, which is why the stock was down to 2.5% or so. But at one point in time, it was down 3 to 4% or so. The company has missed its FY 2025 guidance, both in terms of revenue as well as margins. Also, the company had incurred an exceptional loss of 370 crore rupees, and that impacted the net earnings pretty significantly. Ex-Europe, all the other segments, revenue was below expectations. India growth was also below what peers have really done when it comes to the India business. India revenue growth, in fact, was impacted by weak seasonal demand for respiratory products. There was a fall in diabetes drug sales as well due to competitive pressures. FY25 revenue, as I said, was below the guided range. Margin, of course, was below the guidance as well. But for FY26, the company has said in its con call that it is expecting revenue growth in the range of 10 to 12%. Margins, they are expecting in the range of 19 to 20%, although they have mentioned that net debt stood at almost 490 crore rupees in FY25. I think this is one of the reasons that Nomura is also maintaining a neutral stance. We'll talk about the Nomura report in just a bit, but the company is expecting more launches in the coming quarters that will help stabilize the diabetes portfolio. In terms of the tariff impact, it has said that the impact will be more on branded drugs versus generics. The company in fact has launched as many as 13 products in FY25, including 7 in the quarter gone by, and of course it is expecting growth revival in FY26 with new launches in the respiratory segment as well. It is also planning to introduce in-license oncology products. Now let's talk about the Nomura report. It has maintained a neutral rating on the stock. It has a target price of 1500 rupees on the stock. On a sum of the parts basis, the base business excluding the innovation spend is valued at 17 times estimated EPS for September 2026. In fact, the report has also mentioned that the company's net debt has increased by 1160 crore rupees, reaching 490 crore rupees in March 2025. But of course, they've also mentioned that the rise in net debt, despite an 800 crore rupee inflow due to stake sale in the API business, is something that is kind of concerning. According to Nomura, and they have said that the rise in debt is due to a significant increase in the working capital vis-a-vis last year. A low base last year. US revenue also saw a decline of $10 million on a quarter-on-quarter basis. In fact, it came in at a 41 quarter low. So there is some bit of concern there as well. In terms of the US revenues, they have dropped on account of high competition and a lack of any significant new product launches. But still, Nomura is cautiously optimistic, about the potential growth, because the company is planning some strategic product launches, as I mentioned, that in the respiratory as well as diabetes segment. And that expansion is something that will be watched out for by the street. But today, the stock didn't do all that well. It was down to 2.5%. And if you look at the stock performance, Yatin, last 3 months, 1 month, there wasn't really any traction in this particular stock as well.
And Glenmark, the US sales came in at a 41 quarter low. The growth challenges clearly persist for the US business, where expectations were quite high. But Nandita, let's talk about Zomato, which is eternal, and the stock was down nearly 4%, and that becoming the top Nifty loser. Obviously, some recovery intraday for Zomato, but if you look at the flows, that continue to be negative. Why? Because Zomato, which is eternal, has now decided that it will be a domestic company with the cap of the FII holdings. Now, with a cap coming in on FII holdings, both MSCI and FTSE have announced a weightage cut for Zomato. This would mean that FTSE and Zomato MSCI both put together would see an outflow of nearly $900 million over the next 1 week or so. If you look at FTSE, the rebalancing happens tomorrow, which is 27th of May, and for MSCI, this date is May 30th. Obviously, $900 million means selling of nearly 7,500 crores, which is expected very, very shortly, and because of which the stock was under pressure, down by about 4%.
That's true, Yatin. But Zomato has seen some bit of recovery of late, but still, I think the stock has seen significant value erosion. But if you look at the numbers as well, Yatin, there was clear pain when it comes to Blinkit in the wake of higher competition in quick commerce as well. And now with this weight reduction, of course, case for investment, I think, kind of dims, and there will be significant outflows as well. Zomato or Eternal under pressure. But the other stock that was under severe pressure and was in the slow lane, so to say, was Balkrishna Industries. Although numbers were pretty okay, but the stock did see a significant downtick. At one point, the stock was down almost 10 to 11% intraday. Nomura has downgraded the stock on competition concerns. It has said that it will foray into niche segments, and that has caused some bit of concern among the brokerage community. The company, in fact, has said that it will be foraying into passenger car radial and truck and bus radial tires. The core business, of course, is off-highway tire business. Of course, there is a lot of competition in those niche segments where, market leaders like MRF, Apollo Tires, Seat, and those are the leaders, and competing with them in a new segment would be challenging. That's what Nomura has flagged off, and of course that concern was clearly visible when you look at the stock performance today as well. The In fact, Nomura has downgraded the stock to neutral from buy. The target price has been cut to 2,644 vis-a-vis 3,242. This target price very close to Friday's close price. Now, as I mentioned, the diversification into competitive tire segments has been flagged off as a key risk, and these segments, as I mentioned, is already dominated by key players. And in fact, to make a mark here, the company will have to incur significant upfront investments, to establish its distribution networks and to build brand visibility as well. So that would erode, some bit of returns. So to say, the return on equity would be impacted. Even margins could be compressed. In fact, Nomura has said that this could lead to compression of blended EBITDA margins to 22 to 23% vis-a-vis what the company had thought of 26%. That's the kind of margins that the company had, but it would or it could be compressed to 22 to 23%, and return on equity could also potentially see a downtick of 200 basis points or thereabouts, and that will of course depend on the product mix as well. But in terms of FY26 to FY27 earnings estimates, it is largely unchanged despite the risks. Nomura in fact has kept it unchanged, but in terms of risks, slower than expected demand recovery in its core off-highway tire segment, that is a key risk that has been flagged by Nomura. Although commodity prices also are a risk, because if there is a sharp surge, that would be a risk, and if the company cannot really pass it on to so to say, in the wake of high competition, that could also be a risk going forward. But Nomura is preferring players like SEAT over Balkrishna Industries due to more favorable competitive positioning as well as the risk-reward balance. Motilal Oswal has also flagged off some risks on Balkrishna Industries. Demand headwinds is one in the key global markets, and it has also cut its earnings estimates by 8% each for FY26 and FY27. So although numbers are pretty okay, but it's the foray into these new segments that has emerged as a risk, because that would involve significant investment, upfront investment, and of course taking on established players like MRF, SEAT, Apollo Tires that have already dominance in that particular segment.
True. And the important part here is that they are now diversifying into passenger tires, vehicle tires, trucks and buses, radials, in which they were not present. Obviously, it would mean growth for the future, probably better margins for the future, but probably in the short term, or probably in the next 2-3 years, with margins getting diluted, with cash flows getting invested into capex, that is not good news, and probably for the short to medium term, investors have turned skeptic on the counter.
Yes, they have, and of course, we saw how the stock really did today, although ended lower by 6.5%, but at one point it was down somewhere around 10% or so. But that wraps up our stock list for this afternoon. It's a good Monday, and now of course we will be rushing to get back home safely. But let's hope tomorrow, we see the momentum continuing. 25,000, we have managed to close above that level. 25,200, that has been the major resistance level marked out by technical analysts. Let's hope we conquer that level in the next couple of sessions, if not tomorrow itself. With that optimism, we are calling it a day. Thanks a lot for watching Closing Bell. I'll be back with Opening Bell tomorrow morning at 9 a.m. Don't forget to tune in. But have a great evening, and stay tuned to Moneycontrol for all your other news and updates.